All right, what's going on, everybody? My name is Irek Pikarski, and this is level one, the trading system. So, this is our first out of four main systems, right? In the introduction, we talked about them. We talked about level one, the trading system, level two, the peak performance system, level three, the personalization system, and level four, the lifestyle design system. They're all individual systems that, when combined together as part of hyper systemization, they combine one big system, which is pretty much our day-to-day life, our reality, right? That's kind of how we create it. So when we talked about hyper systemization in the introduction series, we kind of mentioned that those larger systems have smaller systems within them. And that's what this is going to be about. So let's get started to lesson one. So lesson one is about the idea. But let's get on our little screen share here. And as I said in the introduction, I'm going to be pretty raw. I'm going to share some stories. I'm going to swear a little bit, so just an FYI. But our little lesson plan. First, let's go back to the system. Right, we covered that in lesson two of the introduction. Lesson was called the system. Right, we talked about hyper systemization. Right, and right now we're at level one, the trading system. This is our core trading system. We're going to learn everything here that is required for trading. Okay, my goal with this trading system is that once you complete these 12 lessons, you're going to be pretty much good to follow along during our live events and actually trade. You should be able to trade live capital. So by this time, I hope that you kind of did the prep work, the setup, lesson 3 of the introduction, where you set up TradingView or your charting software, you set up your broker account, and you funded your broker account, or at least are in process of doing so. So that, when we finish these lessons, these 12 lessons, you're able to just jump right into it. The goal of this program it's a 12-month program, right? And over the next 12 months, I want you to really, I will teach you everything that you need to know, over the next 12 months. And as long as you implement everything and take it kind of 3 months at a time, so spend about 3 months on level one, the trading system, and trade it. Actually do your best trading it for 3 months, and then when we hit level 2, the peak performance system, that should be about 3 months in. And that's when we're going to start to refine a little bit, talk a lot about peak performance and psychology and mindset and routines and different little hacks and tricks that one can do to be better and become better. And then you're going to implement those for about 3 months. It's going to bring us to about 6 months in. All right. And if we go back to our system here, all right, so we're going to spend about 3 months on level 1, and we're going to trade. The goal is to trade, right, and start making money. So that's why the trading system comes first. And then we don't know if we're going to need any peak performance systems or if we're going to have any lifestyle issues and stuff like that. So we just want to trade for 3 months. I just want you guys to trade for 3 months and do your best. This is a very good system that I'm going to teach you. And again, after these lessons, you're going to be able to follow along on market update during our live events. And that's very important, right? This is complementary to our live events. The live events is the actual work, it's the proper work. This is where we prep for the day and we trade, So I want you guys to be ready for that. And again, like I said, do it for 3 months. And then at the end of 3 months, we're going to hit level 2, the peak performance system. And this is now where we start to reflect on the last 3 months and look at our day-to-day life and our lifestyle and our psychology and our mindset and our routines and our environment and our relationships and our money management and many different things, and start to optimize it piece by piece. And then we're going to do that for 3 months. Science says it takes about 3 months for habits to be formed. First month is a bit rough, second month is better, and 3 months you're starting, the last third month you're starting to get into it. At the end of 3 months, 90 days, the habit is pretty much formed, right? So this is why this is kind of based on quarters, 3 months at a time, So 3 months on level 1 trading system, 3 months on level 2, the peak performance system. And this is where you're gonna you're not gonna change much with this trading system, barely anything, if anything. But you're gonna change a lot about your lifestyle and mindset and psychology, a lot. And you're gonna spend 3 months on that. And then 6 months in, level 3, the personalization system. You've now been trading for 6 months. You spend 3 months implementing the peak performance system. And 6 months in, you're going to be able to personalize the trading system. You're going to have 6 months of data. You would have already implemented the peak performance stuff, psychology, and all that stuff. And you're ready for the next major trading overhaul, the next major trading lesson. I call this the advanced trading system. I called it the personalization system, but it's kind of like the advanced trading stuff. And we're going to go back to the idea, the analysis, the execution, the management, the journaling, the numbers, the growth, and kind of play around with it a little bit. I'll show you how to personalize it, how to kind of make it your own, right? And we're going to spend 3 months on that. And at 9 months in, you're going to pretty much know your system. And then level 4, the lifestyle design, this is pretty much hitting 9 months in, and it's going to take you to the full 12 months. And this is now where you start to think about the transition to full-time trading, what needs to happen, how much more capital do you need, maybe you're already there, and you're going to start the transition to full-time trading and on your way to scale to $1 million and live the life of your dreams, right? So again, it's a 12-month process. It's not going to happen in 4 weeks. It's 12 months. I want you guys to kind of commit and do a really good 12 months, all right? So I just kind of wanted to go back to the system, break it down a little bit, give you guys a little bit of a roadmap, an idea, So again, take it 3 months at a time, master it, and then focus on the next system while you continue doing level 1, level 2, and level 3, and so on. Right? You guys get the idea. But the main thing is I want this to prep you guys for our live events and the actual work, right? Which is the trading. So let's go to lesson 1 of level 1, the trading system. So we're going to go through the entire trading system here. And again, let me go back to kind of what I was talking about with the, again, like I said, it's not scripted, which makes it fun. But when I was talking about the system, let me screen share that again. Let's open it up. Here we go. And just so we can have a look at our lesson plan here for level 1, the trading system, which is we're going through it now. Each one of these, the idea is a system, the analysis is a system, the execution is a system, the management is a system, the journaling is a system, the numbers is a system, and the growth is a system. And these are the strategies, 5 strategies. Now, every single one of these steps is in order, and it's actually in order, like legit in order. Obviously, it's in order here, but this is how we're going to trade step by step. So first, we're going to generate an idea, and we do this every single day, every day during our watch list, during our most important hour, during our live event, during your own preparation. You're going to be first starting with the idea and putting together a watch list and putting together some ideas to trade for the day or for the week. Then you're going to back that up with the analysis. You're going to analyze those ideas more and actually pinpoint whether they're shit, whether they're good, and which ones are the best. Right? And then once you do that, and once you find your best and your favorite by first generating the idea, then backing up the idea of proper analysis, then 3, it's going to be time to execute. Right? So you see, this is all in order. This is actually how we're going to trade. Right? And then once you execute, then it's going to be time for management. You're going to have to manage your position because you're already live. You already took it. You already traded it. So then it's time to manage it. And when it comes to management, there's 2 parts to it: risk removal and profit management. And that's part of the management system. First is going to be risk removal. So that's the next step. You're going to remove risk. Once you remove risk, you're going to start focusing on taking profit. And then trade closed. And then you're going to log it. You're going to journal it. And then after, you're going to make sure your numbers are correct and make sense. And you're going to know your numbers to see if there needs to be any improvements or adjustments. And then all together is going to form your growth plan, your scaling plan. It's all piece by piece, right? And that's kind of what makes it simple. I want this to be a very simple system that kind of anybody can implement and learn and adjust and kind of work with. But that's trading in general. Every trader really needs to follow the system. Generate an idea, back up that idea with analysis, execute that idea, manage that idea by removing risk and locking in profit. And then once that trade is closed, journaling that idea, that trade, running the numbers after a few trades, and then make sure you're on track for your growth, for your scaling, to hit your numbers, to hit your goals, to hit your KPIs. KPIs stand for key performance indicators. We're going to learn that in peak performance system level 2. So yeah, so let's get to it. I think that's enough of prep for level 1, the trading system. So yeah, let's focus on lesson 1, the idea. Let's get into it. It's going to be quick. Right, so I have a few points here because, again, it's not complicated. So the idea is pretty much, think of it as a thesis. If you're writing an essay, you're generating a thesis, right? It's the first paragraph of an essay, of a scientific journal, whatever. The first paragraph is the idea, So what is the main idea? The main idea is, again, when you're building a trading system, it has to be something that can replicate, that can be replicated over and over and over again, something that repeats quite frequently, right? We don't want a trading system that only happens once in 2 years. We want a trading system that can generate an idea over and over and over and over again, and for it to be the same idea every single time, right? And that's the key, right? Otherwise, trading systems random. Then when you're thinking about science and scientific studies and case studies and so on, it has to be able to replicate itself, right? So that's the point here. The main thesis, it needs to replicate itself. So it starts with this line here. And this is a very important line. This line is the basis for everything that we do. And a run on a higher time frame, HTF stands for higher time frame. A run on a higher time frame is a trend on a lower time frame. So what does that mean? During this whole series, I'm going to be going through about 50 of my trades from this last year. Most recent, up to date. About 50 of them. And they're going to be in the form of a screenshot like this. Right? So you already know this layout. You should have set up this layout in TradingView. We got our 6 charts, we got our daily chart, we got our 4-hour chart. Let me make this camera window a bit smaller. Let me remove the camera for now. There we go. Right, so we got our 6 chart layout, we got the daily time frame, we got the 4-hour time frame, we got the 1-hour time frame. All right? And then we got the 15-minute, we got the 5-minute, and we got the 2-minute. All right, pretty simple. We set all of this up, and yeah. So you're going to be seeing this over and over and over again. Again, this is going to be not much theory. It's going to be pretty much screenshot after screenshot, and we're going to be doing this shit. All right. So the idea, a run on a higher time frame is a trend on a lower time frame. What the fuck does that mean? Well, check this out. This is daily chart, right? This daily chart has a trend. Run, pullback, run, pullback, run. This is a trend, okay? And right here on a daily chart, this run, a run on a daily chart will be a trend on a lower time frame, such as the 1 hour. So you see this daily run right here, right there, lasted about a week or two, was a trend on a 1 hour chart. It's this whole thing on a 1 hour chart. This whole thing. Right? Same thing on a 4-hour chart. It's this whole move right there. Right? So run on a daily is a trend on a 1 hour. right? Now, let's go through a few of these, right? What we're looking at is, again, these reversal points, right? So this run on a daily right here, top, is pretty much this trend on a 4-hour. All right, and I'm just kind of selecting random examples, you know. What we're mainly focusing on is the next point, which I guess I'll get into in a bit. Let's go to a live chart. Let's go to Bitcoin. I'm just going to do some examples, all right? Let's go to Bitcoin. What we're focusing on is whenever we're trading anything, we're focusing on, this is again a daily chart on Bitcoin. We're focusing on these kind of reversal points, is when the market kind of like starts to reverse a little bit in either direction, doesn't matter which way. When the market starts to reverse, right? A run eventually ends and has a little pullback, and then runs and then has a pullback. Bitcoin is quite volatile, that when it runs, it fucking runs. And every single market is unique, but what every single market has in common over time is that it doesn't run forever. There's always points on a chart that forces the market to reverse and have a pullback, and then it runs again, and then it has a pullback, and then it runs again, and then it has a pullback, and it runs, and it pulls back further, and then it runs, and so on, right? There's always these reversal points. Doesn't matter which market we look at, right? This is Bitcoin. What about S&P 500? Ticker symbol SPY. SPY is an ETF, right? And let's look at a daily chart again, right? There's runs and there's pullbacks, right? There's big trends. A trend is just composed of runs and pullbacks, all right? So, but everywhere there's a run, there's a pullback. There's a run, there's a pullback. There's a run, there's a pullback. There's a big run, there's a pullback. There's a big run, there's a pullback. Everywhere. Pullback, run, you know, so on. That's S&P 500. What about oil, US oil, commodities? You know, let's look at the daily chart again. Historical, let's fucking take it back to, you know, history here. 2010. Run, pullback, run, pullback, run, pullback, run, pullback, run, pullback, reversal, potentially, you know, but there's always these kind of reversal points. They happen over and over again. And our goal is to spot them as they are happening. And it's not that hard. Okay, that's part of the analysis. Okay. But just kind of making a point that we need a system that repeats itself. So we're focusing on these kind of like reversal points in the market where a pullback or where a run ends and a pullback begins and so on. Right, so this is US oil. Well, what about US dollar CAD? US dollar Canadian dollar. Just for example purposes, let's look at the daily chart. Again, there's all these runs and pullbacks, right? That's a lot of fucking opportunity because every single one of these runs and pullbacks is an opportunity for a potential trade. Not every single one. They don't always have an opportunity, but they always reverse. And a run starts, and then a pullback starts, and so on. Right now we looked at daily charts, but hey, you know, this happens on a 1 hour. Same idea, right? It's not always just running. And the main point that, or at least the next point that I want to talk about, right? We know a run happens all the time, but a run on a higher time frame is a trend on a lower time frame, right? It's just that, because that's the main thing that we're going to be focusing on. Is we want to identify these kind of trend reversals. So if we go back to, you know, Bitcoin, and our idea here is that, hey, as an example, right? Bitcoin has been falling for a little bit. It's hitting some support. It's starting to reverse off of this support, and maybe a bullish run starts to begin. Okay, well, if we believe that a bullish run is starting to begin, we need to back that up with the other part. A run on a daily will be a trend on like a 1 hour, right? So this is a daily chart, and we can kind of say, hey, we believe Bitcoin is going to go up for a day or two or three or maybe 3 months or 6 months. But we're just focusing on a daily chart, not a monthly chart here. Daily chart. So we're just kind of saying it's going to go up for a day or 2 or 3, right? We're day traders. I'll teach you swing trading later, but this is day trading, right? So we're just kind of making a direction prediction. We believe that this is going to run maybe for a day or 2 or 3. Okay, well, we need to back that up with a trend change on a lower time frame. We got to look for a trend change. So you can see this 4-hour chart. As this run started on Bitcoin from, 71,500 right there on June 2024. As this run, bearish run started, bearish means it's just going down. Bullish means it's going up. You're going to hear me say this all the time. You'll get used to these terms, even if you don't know them now. Give it a month or a little bit and you will. As this run started, this bearish run started, this was a trend on a 4-hour chart. Just nicely trending down, making lower lows, lower highs, lower low, lower high, lower low, lower high, lower low, bigger pullback, lower low, lower high. Oh shit, a higher low. Now we're starting to kind of determine, hey, you know what? There might be a trend change. And we're going to learn this in analysis, in the lesson 2 of the analysis. Then there's MACD divergence. MACD tells us, hey, you know, at some point there's going to be a trend reversal whenever we start to see some divergence. And again, you're going to know all of this. You're going to learn a lot of this during our live events and stuff, because we're going to be doing this every single day. Every day we're determining, hey, you know what? I believe this is going to go up today. Is there a trend change? Yes, no, and so on. Right? Then once this breaks out bullish on a 4-hour chart, we can say, hey, this is now on a bullish trend and the daily run's beginning. And that's kind of what we talk about here, right? A run on a higher time frame is a trend on a lower time frame. So when we believe a new run is beginning or a run is ending and a pullback is beginning, we kind of have to also look at, hey, you know what? Is there a trend change that's beginning on a lower time frame? Right? So when we believe, hey, this daily run is ending or beginning or whatever, we got to kind of look at, hey, is there a trend change beginning or ending on a lower time frame? All right? And that's our concept. And you're going to notice that we do this over and over and over again, right? Then point 2 here of the idea is the reversal points. So you got to find key points in the market where price action reverses from. And again, you know, every single reversal we're not going to trade, but we're going to trade some that have kind of a high probability. You know, reversal points where kind of price action hits and hey, you know what, it's starting to turn around. Let me show you some screenshots because every single one of them will have what we're talking about. Right, so here is a trade, Aussie CAD, Australian dollar, Canadian dollar. And you can see that this daily chart has a level. This daily chart has this gray line, and that was previously rejected and price action fell. It hit it here and price action fell. It hit it here roughly and price action fell, right? So when we're starting to see price action hit it again and stall at that level, we were starting to make a determination that, hey, you know what? This might be a reversal point. Right there. Right? And then we start to back it up. Well, if I believe this is going to be a bearish run or pullback starting to form from this reversal point, is there a trend developing on a lower time frame? And there was kind of a double top and started to die off and so on. Right? And we're going to talk much more about that. Let me just find another decent example. Here's another one, right? So there's this horizontal level that has a few hits on a daily chart. Let's zoom in. Broke that level, retested that level, fell. Hit that level again, fell. Broke that level, had a quick retest of that level and ran up. Broke that level, came for a quick retest of that level and fell. Hit that level again and fell. Okay, we got a level there. Could be a reversal point. It started to hit it again and reversed. Good. Right? Do we have a trend change? And we do. This is what you call a head and shoulder pattern. Again, you're going to learn this in analysis. But this is kind of, I'm just trying to build a picture here, right? So the idea starts to form that, hey, you know, a run on a higher time frame needs to end sometime. And it ends at these reversal points. And then we confirm, hey, okay, if a run is ending on a higher time frame, if a run on a daily, if I believe this run on a daily is ending, well, I should be getting a trend change on a lower time frame. If I'm not getting a trend change on a lower time frame, this is a trap. This is false. The idea is not there. A run on a higher time frame is a trend on a lower time frame. And if a run is ending and a new run is beginning, a trend should be ending and a new one should be beginning, right? So that's the idea. If a bullish run is ending, then the bullish trend should be ending, and so on. So those are the first line and reversal points. Now, the third point here is direction prediction, right? So as we're kind of identifying all of this, right, we're making those direction predictions. Let's go back to the screenshots for a bit. So, direction prediction is a simple term that, again, we're going to be using all the time when it comes to the idea part of the system. Direction prediction is, hey, you know what? This level is being hit on a daily chart, right? This level is being hit. There's quite a few rejections off of it. 1, 2, 3, 4, and currently number 5. So as it's rejecting it and giving us a reversal candlestick, you're going to learn this in lesson 2, I'm going to start to form a bullish bias, meaning a bullish direction prediction. I'm saying that this might go up. So I'm making this direction prediction, right? I'm trying to just kind of make it simple, right? So that's kind of what a direction prediction is. And we're going to be doing this all the time. Hey, this level was rejected. I believe it's going to go up. Hey, this level was rejected. I believe it's going to go up. And so on, right? Let's have a look at another random example here. Yeah. Hey, you know what? This level broke down and came back for a retest. I believe it's going to go down. You're making a direction prediction, right? So you're kind of utilizing the first few kind of principles. A run on a higher time frame is a trend on a lower time frame. That run needs to end somewhere, and that trend on a lower time frame also needs to end. And as this stuff is ending at a reversal point, we're making a direction prediction whether it is bullish and price action is going to go up, or whether it is bearish and price action is going down. Right? And then the next point is trend change. Again, we're going to be talking about this over and over again. All of this is going to build on top of each other. This is just the simple building blocks. Then we got a trend change. The trend change, again, is our kind of confirmation, right? So when we believe that, hey, a run on a higher time frame, let's go to another random example. When we believe a run on a higher time frame is ending and reversing, it can be small. This pullback, I believe that it was going to reverse right there, and I made a bullish direction prediction. I need to then kind of like make sure, hey, is there a trend change? So when I kind of make that, direction prediction, right? When I find the reversal point and make a direction prediction, I then need to kind of check, hey, is there a trend change? Right? And that's that idea, right? So on a daily chart, right here, I kind of believed, hey, you know what, this is kind of a turning point. We started to get some reversal candlesticks, and we had this bullish move. So I believed that this was rejecting this area, and I made a bullish direction prediction. But in order for that direction prediction to be valid, I need to make sure that the lower time frame has a trend change, has had a trend change. And it did, right? This pullback here on a daily that lasted a few days was this trend on a 1-hour chart, right? And this trend on a 1-hour chart as it was trending down, making lower lows and lower highs, eventually it bottomed and it reversed. And therefore we had a trend change, a trend reversal. It went from a bearish trend or a bearish run on a daily right there to all of a sudden switch to a bullish trend, just the beginning of it. right? And therefore confirming our bullish direction prediction for the next day or two. Get the idea, right? And as we do that, it makes our watch list. And I mean, that's kind of it. It's kind of it for this lesson. It's pretty simple. Very simple. Something that again happens over and over again, right? Hey, let's just kind of go again through this example. Hey, you know what? This daily chart has a major level. This bearish run on a daily chart looks like it started to reverse and potentially end at this level. Okay, well, I need to back that up. Well, at the time of the trade, the day before close as this bullish, big bullish reversal, rejecting this level. So I made a bullish direction prediction for the next day or two, not a week, day or two. It's a daily chart. Okay, well, I need to back that up with a trend change. Is there a trend change? Yes. 1 hour chart was trending down as the daily chart was running down. Eventually, the 1 hour chart bottomed, had bullish MACD divergence, which means at some point the trend will reverse. And then the trend did reverse, made a new high, and we had a trend change. And at this point, this made our watch list. Right? That's kind of what happens. Another random example, right? Daily chart. I kind of believe that this run was coming to an end here. And specifically on this day right there, where there was this big bullish candle rejecting this area, I made a bullish direction prediction, right? That this was going to go up for a day or two or three after those highs, right? Then I needed to confirm that with a trend change. And there was one. The 1 hour chart was trending down as the daily chart was in this bearish move. And then the 1 hour chart eventually reversed into a trend change. A run on a higher time frame is a trend on a lower time frame. When a run on a higher time frame ends, the trend on a lower time frame should also end. And when that happens, our idea is valid, and we're starting to put this on our watch list, right? So at this point, when this 1 hour chart broke out, right here, right there, this went on our watch list, right? And we do this process every single day during our watch list creation or during our live events. So that's kind of it for this, right? So we talked about the first main thesis. A run on a higher time frame is a trend on a lower time frame. This is something that repeats over and over and over again. Doesn't matter which market we're looking at. Doesn't matter which market. Stocks, crypto, forex, commodities. Today, yesterday, a year ago, 10 years ago, 20 years ago, 10 years in the future. It's something that will always happen. A run on a higher time frame is a trend on a lower time frame. A run will always end, and a trend will always end. And therefore, we're looking for those reversal points. Point number 2, the reversal point, where that run ends and where that trend ends, right? And then we kind of get that confirmation. Hey, you know what? It rejects on a daily chart. We believe, hey, it's starting a bullish run now. And then we confirm it with that lower time frame trend. It changed. It went from bearish to bullish. We got that confirmation. And then once we get that, we put it on our watch list. And that brings us to lesson 2, the analysis, to confirm that idea, to make sure it's the good one. I'll see you in the next lesson. Take care.